Hi, this is Zach Meir with the US Blue Chips here at Zach's Traders Cafe for Sunday, the 18th of May. Starting off with Apple, and here you can see that we're nestled very well just above the 50-day moving average at 208. And we've also got a line of resistance which we're holding above now, which is obviously quite encouraging, and we've held the gap that we had back at the beginning of last week. The view now is with the RSI at 50, just under 55, so half full rather than half empty above the neutral 50 level. We're still looking for the shares to fill the gap up to $221, hopefully by the end of this month. On the downside, obviously, there's a gap to fill at 200, which should also not be so nice. And the idea, if there are any dips towards that 50-day line at 208, then they would be buying opportunities while there was no end-of-day close below that line, i.e. intraday. But the risk here at the moment is down towards $200. The resistance, obviously, towards that gap at 221. Moving on to Alphabet, and here you can see that the shares are trying to get back inside that rising trend channel that we had mapped out here since, for a long time actually, since November 23. See that the line there running just below the current price action, and the way the shares are behaving at the moment with the RSI at 57. Looks as though they're making quite a good go of getting back in the channel at 165. We've also got, I suppose, extra support there from the 50-day moving average at 161, so above that on an end-of-day close basis. Looking for this market to at least head back to recent March resistance on the way down towards $176. But the more time we spend above both the 50-day line and the floor of that channel, the better for this stock. Moving on to Amazon, which suppose has made a pretty good job of fighting back against the tariff breakdown. In fact, the gap higher, rather stronger than the decline. We only had sort of small gaps up and down from the end of February. Big gap we had at the end of last month, and then massive one, which this stock's struggling to fill. A little bit of an island reversal situation there, so we need to get an end-of-day close back above 208 really to ensure that we don't slip back and have to head back down and test the 50-day line. In a way, it's almost as if the stock has bounced back too enthusiastically from the tariff breakdown. But here, staying near that old March resistance at 206 is relatively healthy, even though we are fearful of a test of the 50-day line. On to Berkshire Hathaway, which I just don't want to call Berkshire Hathaway because sounds very British, the name. But even so, we've got a situation here where the shares have gapped down after the shock announcement from Warren Buffett. I suppose it's difficult to have a shock at the age of 94, but quite a shock nevertheless for people who've been in the market all these years. Support here towards 750,000, and looking for the shares to get back above the 50-day line there at 778. Best case would be up to filling that gap down that we had through 804,000 by the end of next month. Obviously, the big channel here up towards 850,000, but maybe we've got to wait on that. But I think given the shock that the market had, shares had gapped up and then had to gap down. This stock has put on a pretty good performance, and obviously, if you think historically, any dip by definition over the recent past has been a dip to buy into. So I suppose anywhere near 750 is looking like a clever place to go. Moving on to Coinbase, which is enjoying the revival in the crypto space. Beautiful inverted head and shoulders that we had there, the neckline there around the $215 level. We actually gapped up through the old February resistance, 232, and above that, looking for the top of that rising trend channel, $365 by the end of next month. Really going with that as being a proper turnaround. This stage only back below the top of the gap there, 232, really delaying the upside scenario by any amount. Moving on to Discover Financial Services, where the shares have managed to recoup all the losses that they had with the tariff debacle, and now the situation is really looking for them to remain above the floor of the recent gap at $192, above that looking for as high as $236 by the end of next month. The shares just backing off the best levels and also backing off the overbought RSI area as they did back in January ahead of the rug pull. Moving along to another situation which may be worth noting at the moment, and comes in the form of Meta. Here you can see that the shares have regained the bulk of their losses, but the key here is staying above the floor of the latest gap, really around the $606 area. That's probably the worst on the downside. Ideally, we stay above the top of the gap there, 622, and then head up towards the best levels of the year through $700. I suppose for $700, we're probably not looking at anything quicker than the end of next month, but you never know with these situations. Already bounced back from 480 to 640 in very quick time. Moving on to one of the stocks of the moment, which is MicroStrategy, and here, one of the stocks of the moment, largely on the basis that everyone's trying to copy them and their perpetual motion machine strategy, which is obviously an indicator of our times. Here you can see that we've got a rising trend channel. Shares bounce back well, and really the name of the game now is to hold above the key area, which is around $375. And that was actually coincidentally that late, the early peak that we had back in January. But above the 375 area, looking for the shares to retest the best levels of the year, seen in November, obviously in the wake of the Trump arrival, Trump presidential victory, and the spike to 109 on Bitcoin at that time. Moving along to Microsoft, and here another situation which has bounced back really well after the tariff effect. Obviously, not probably, well, as you can tell from the chart, not a company which is affected too badly by any tariffs or by the prospect of tariffs. And in fact, it looks like it's almost a winner in that situation. Current situation is we're heading towards the top of that broadening triangle there from October. The level there, 461. I suppose you could argue that the level is a bit higher, up to as high as 470, but you can take your choice on that. The old resistance there on the way up around 443 and above that, looking for 470 or so. Maybe the initial May resistance of 439 appeals to more as a potential support area if there is a pullback. Nvidia is next, and obviously this was hit by a couple of things in the recent past. The first was the Chinese copy of what they're trying to do, and the second, obviously, the tariffs, but seems to be back in business after a rather very volatile period. Top of the gap there at the bottom of the gap there, 131. Above that, we are looking for the shares to hit 150 again, hopefully by the end of next month. Worst case at the moment, it's got to test that late March support there at 123. Netflix is next, and here the market heading for new highs, actually became a tariff winner rather than a tariff loser. And here you can see that 1340, the top of the channel there now, that's what we're looking for, especially while we're above 1166, the initial May resistance for this stock. Worst case, obviously, move down towards 1100 at this stage. Palantir is next, and another winner in terms of bouncing back to be higher than it was back in February. Top of the channel there, heading as high as $138, and we're looking for that while we're above the May resistance at $125. On to the last two. The first one is Shopify, and here a bit of a struggle in terms of getting back to where it was back in February, which was around $129. But at least while we're above recent neckline resistance at 101, that's what we're looking for, especially with the RSI on the right side of 60. And also the way that the 50-day line is now starting to rise. But if we're really lucky, we'll actually get above $110 and we'll stay above $110 ahead of the move up to $130. Finishing off with a situation which hopefully will recover rather better than it has so far. Here you can see that we've got Supermicro Computer, and the top of the channel here heading towards the $73 level. Obviously that's probably a level for later in the summer, but it is encouraging that for the last few sessions we've actually found support at and above the old March resistance at $43. If we can stay above that over the next week, one would assume that $70 plus could be on its way for the end of June, especially given the way that we've got rising 50-day line. We've had a gap fill and also an unfilled gap to the upside above the 50-day moving average. That's it from me today. More updates soon.